Let's focus on the Fed here. It's one of the hot topics of the morning. Come inside the Bloomberg, and this shows how many hikes are baked into the Fed funds rate for 2016. It's about 3.5. 2018, it's about 3.5. Scott, where are you?
Well, we're at 4, and I think that, the real question is how many will we get in 19? And, I personally think that the Fed will move to 3 or 4 in 19, but certainly the dot plot doesn't show this at this point, and the market's not priced for that either.
So where's the asymmetric risk then?
Well, the asymmetric risk here is that we have all this fiscal stimulus coming through the pipeline. A lot of it isn't really going to hit us until later this year and going into 2019. And, at the same time, we're running into constraints. We have labor markets that are becoming tight. We've got inflationary pressure starting to build, and the Federal Reserve has to start leaning against this. And I think they're slowly moving into a restrictive stance.
So does all that fiscal stimulus change the terminal rate, or does that just make us have a blip over the next 18 months or so?
Well, I personally think it doesn't affect the terminal rate, but it'll be interesting to see today in the dot plot whether the policymakers are starting to think the terminal rate should be higher. But I think ultimately, David, where we're going to end up here is that we're probably going to have an overshoot to the upside in rates, probably a short-term rate of maybe 3.25% to 3.5%, and that will be too restrictive and ultimately will bring us back to a recession.
So does that mean we wind up getting a steeper curve or a flatter curve?
I think flatter. I think it's going to be
3%, but it's still flatter.
Very flat. Well, look, history shows us at the end of the cycle that the 10-year note is roughly equal to or lower than the short-term rate. So with short-term rates today, somewhere around, depends on your point in the yield curve, but 1.5%. With a 2 percentage point increase in short-term rates, where we move closer to 3.5%. The 10-year note today is almost 3% when we're sitting here, so there's not a lot of room for the long end to move up.